Today we're talking how to get the best returns from your investment property, and if you stick around to the end, I'm going to talk about the biggest mistake I see investors make. Thanks for tuning back in, guys. Today I want to talk about how to really maximise your returns on a rental property and a few tips and tricks to really make sure that you are getting the most out of your properties. Now, the great thing about rental properties is they are considered passive income. That is, you don't really need to do anything on them, and 99.999% of the time, you won't need to do anything with an investment property. It's pretty much a set and forget investment. However, it's important not to get trapped by this mentality. I want to cover a few real basic things that you may not have thought of that will really help you increase your rental returns. First and foremost is to track the market. The rental market is constantly changing. Prices are going up, down, sideways. It's important when a new lease comes up that you are checking the rental market and seeing where rental prices are currently at. It's amazing how often I see people put their properties up for market for rent $40 or $50 below the current market value. So that's if you've got a $500 a week rental property and you're renting it for $450, you're doing yourself out of $50 a week, or this works out to be $2,600 a year. That's enough for a nice holiday to Bali. So make sure you are tracking the rental market. So the second tip is pretty closely related to the first, and that's to make sure you're not overpricing your rental property. So to go back to our example of a $500 per week rental property, if you were to advertise this property for $510 per week and you're $10 above the rental market or what similar properties are renting for, you might find that property will sit on market for 2, 3 or 4 weeks before someone finally comes along and pays your price. So if you miss out on 2 weeks of rental income because you're chasing $10 too much, you've missed out on $1,000 of rental profits that you could have had. With a $10 increase, it's going to take essentially 2 years to make that $1,000 back. So really be careful of where you price your property in the rental market. And if you haven't attracted a tenant in 1 or 2 weeks, be very aggressive with the price drop. Drop the price, get it rented out sooner rather than later. You can always increase the rents when that lease comes up for renewal. The third tip is to maintain your properties. I'm a strong believer that like attracts like. If your property's busted up and starting to fall to pieces, you're probably going to attract a similar tenant. So make sure that you are maintaining your properties. If a tenant does vacate, it could be a good idea to go in and give it an updated paint. Update the paint. I can't believe that just happened. If your property is getting run down, could be a good idea to upgrade the paint. Or maybe change some light fittings over. Might even be time to upgrade the kitchen. So really look at your property and keep in mind that a like property will attract a like tenant. If you've got a well-maintained property that's in a very clean and tidy condition, you're going to attract a clean and tidy tenant. It's that simple. The fourth factor that I think it's worth taking into consideration is to whether you rent your property furnished or unfurnished. There's certainly pros and cons to both of these. We actually own a unit in the city in Cairns that we rent out furnished. So the rental market for an unfurnished property was about $300 per week for a similar property. We managed to rent that property out at $380 per week furnished. So we got an extra $4,000 per year having that property furnished versus if it was unfurnished. So it's well worth looking into that and tracking that market. We certainly didn't put $4,000 worth of furniture into that property, so after a year we're already ahead on that investment. My fifth and final tip is to keep your tenants happy. If your air conditioner breaks down, get onto it and get it fixed sooner rather than later. If you can keep your tenants happy, the chances are they're going to stay in the property longer. A happy tenant's a good tenant, they're going to pay their rent on time. So like I say, if something breaks, get it fixed. If the tenant wants to put up blinds, see if you can facilitate that and put up blinds in the bedroom. If you can keep your tenants on side, you'll minimise vacancy periods, and this will really increase your rental returns in the long run. Now, as promised, for those that have stuck around, make sure you subscribe, make sure you hit the like button, but I do want to discuss the biggest error and biggest myth I see in the rental market, and the mistake that I see landlords making. And this is, if you've got a good tenant, don't increase your rent. This is a huge mistake. I see properties all the time that should be renting for $350, $400 per week that are currently renting for $250. The landlords are losing up to $5,000 a year in lost rent. So really, if you do have a great tenant in place and you keep the rent on track with where the market is over time, you're not going to upset the tenant. Essentially, the tenant is going to have a look at what else is available, and if they realise they're on a fair deal, they're going to stay. Really, the only reason a tenant's ever going to vacate a property is if that property no longer suits their needs, they're moving out of town, or if you are not maintaining the property. So if you maintain the property, if you keep the rent fair, you will keep your tenants in place unless their situation changes. So really, super important takeaway from this, track the rent, keep your tenants' rent fair, and this way you won't do yourselves out of thousands of dollars. Thanks for tuning in, guys. We do put out videos like this weekly, so make sure you hit the subscribe button, and if you have got some value from this, make sure you give it a like. Look forward to bringing you more videos soon.